Filing your taxes are inevitable if you are a resident, so it's a good idea to become familiar with the system. This is a special review on the income tax season. My name is Keisha Brooks. Stay tuned. As a St. Martin resident, you must file your income tax for 2013. Here's how it works. Taxes are calculated yearly according to your earnings from January 1st to December 31st inclusive. You will be required to declare all your earnings from the moment of your arrival in a French territory. Taxes are calculated from the information you supply in a form called the income tax form, which must be completed and sent to your local tax office in Concordia. It concerns all information about your earnings during the previous calendar year. Normally, deadline date is May 31st of every year, but it's not uncommon for the May deadline to be extended by several weeks, in which case it is announced beforehand by the tax authorities and widely reported in the media. If you fail to supply your yearly tax return by the given deadline, you'll be subject to a surtax of 10%. You can pay tax in 3 installments spread throughout the year, which is still the most common choice, or opt for a direct monthly debit system. If you are salaried, your employer will provide you with notification of your declarable income for the year concerned. If you are self-employed, you must be able to produce detailed accounts of your earnings. It is best to seek expert advice before filling in your tax form. Conversely, tax concessions are accorded to different categories of taxpayers, including parents, people who contribute to charity, and a number of professions. Once you are recorded in the system, the form will be sent automatically to your home address each year. If you move house during that year, it is your duty to send the next income tax form to your new local tax office. The Impôt sur le Revenu, IR, is a tax on all income available to individuals in a year. With certain exceptions, net income is determined from total income, whatever its origin, after applying certain deductions, and then a single scale of taxation is applied. This scale is characterized by rates applied to slices of income according to the principle of progressivity. However, there are numerous provisions, so there are many systems of taxations depending on the type of income received. In addition, capital gains are subject to a fixed rate of tax. The IR is payable each year on the total taxable income of the household. The income subject to IR is divided into 7 categories: industrial and commercial profits, non-commercial and agricultural profits, land income, salaries and wages, pensions and annuities, movable income, and capital gains. Let's review some statistics of last year. The most important elements are the number of subscribed declarations, or 17,113, of which about 15,925 being residents of St. Martin. Out of those declarations, 3,921, which is about 23%, are of taxable households, with 3,173 being residents of St. Martin. 13,192, which is about 77% of returns, are of non-taxable households. If one considers only the residents, the rate of non-taxable households are 80%. The total estimated collection of income tax is about 9.1 million euros. The expected revenue rate is based on previous years, should be about 90% in late 2015. Overall, half of taxable households are subject to a tax not exceeding 1,000 euros and 45% of the total amount of income tax based on about 200 tax households. This tax is focused on the 10% of households reporting the highest incomes. Finally, the Territorial Council subordinate gave notice of non-tax payment of a duty stamp of 100 euros. To date, approximately 8,500 notices of non-tax have been issued and are therefore 850,000 euros in additional tax revenues that have been collected. What about this year? The majority did not make any major changes to the tax. Contrary to the measures adopted by the Parliament at the national level, The majority ruled to increase the tax burden on families with children. The tax brackets were slightly upgraded, which is a measure favorable to taxpayers. The rates of different tax brackets were kept unchanged. The tax reduction of 40% enjoyed by residents was kept unchanged, and this reduction is only 30% in Guadeloupe, and it does not exist in France. Simplifying a bit, to be taxable, a single person must declare more than 15,100 euros salary. A household without children, 24,500 euros. A household with a child, 28,000 euros. And finally, a household with 2 children, 31,100 euros. In addition, all existing tax cuts were also maintained. Residents can therefore, for example, continue to receive very favorable tax incentives to finance the purchase of their primary residence, employment of employees at home, or care expenses. Furthermore, the levy of 100 euro in respect of base fees, collection, and control will continue to apply to both taxable households. Then for non-taxable households will get their notice of non-taxation. Just as a note, the Tax Department of St. Martin has set up public meetings for those needing assistance filling out their tax forms. Officers of the Tax Department will be at the following locations during the tax season: La Maison des Quartiers d'Orléans, Friday, May 23rd from 8 a.m. to 12 p.m. and Wednesday, June 4th from 8 a.m. to 12 p.m. The MGC de Grand Cause, Wednesday, June 4th from 8 a.m. to 12 p.m. The MGC de Sandy Ground, Thursday, June 5th from 8 a.m. to 12 p.m. and from 2 p.m. to 4 p.m. In closing, no one wants to pay taxes. Our government relies largely on money raised through taxes to produce revenue. Taxes raise money to spend on roads, schools, hospitals, and government functions. It guarantees each and every one of us a society that is more caring, more just, and more economically dynamic. June 15th is the deadline for filing. Make sure you file. My name is Keisha Brooks, and on the behalf of the Collectivité de Saint Martin, thank you for joining us. Have a good evening.